From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming June 17th Forex session. In front of you, I have the Euro US dollar pair, and first I will attempt to uh, explain the trend line that you're seeing. On the weekly chart, you can see that, and this, for me, as far as trend lines are concerned, is probably a grade B trend line, meaning that I put a certain amount of uh, faith in it, but only so much. Nonetheless, you can see that it is there, and as a result, there's going to be something in this range pressing. So that's what this line is. Anyways, to make the analysis for the pair, look at the last three candles. They've been hammers at the top of a move higher. Now, this is almost always a positive sign, uh, unless, of course, you break down below them, and then they become what is known as hanging man, and in this case, hanging men, which is very rare and very bearish. So on a move down, and I would call it at 132.50 or so, I think that the euro falls probably back down to about 130, maybe as high as 132 because of the previous consolidation. But I would have to think that if we broke down through this support, that enough momentum would come into play that something significant has changed. Nonetheless, though, the three hammers, of course, can mean very positive things. And all things being equal, right now, I believe it means that the market wants to challenge this downtrend line. If we can get above that downtrend line, 135 will be targeted. Um, you would assume in very short order. Probably do the same. Probably do both of these in the same candle, quite frankly. The FMOC meeting is, or statement, excuse me, is on Wednesday, and I believe that is the catalyst that people are looking towards. People are so wrapped up in knots about will the Fed cut back on its quantitative easing or not, and as a result, that seems to be the only question the markets care about right now. I think this is part of what this move is right here. It's anticipation of them clarifying their situation where they are not planning on tapering at this particular moment and would only do it as conditions warranted it. That should relax the markets a little bit and, of course, sell off the dollar. So we'll see how this plays out. Again, though, if we get below the 132, say 50 area, we would have to think that this is breaking down pretty significantly because of the very supportive candles that make this market look like it's going to have an upside bias.